Good morning all. Okay. So we are in the chapter deductions. So in deductions, so let me quickly revise whatever we have. Yes, you will get the same 3 set of books even in fast track classes also. But as of now, we have sent only the Pulse concept book and applicator workbook only has been dispatched. Handwritten notes was not yet sent. Not just for the fast track classes, even for the regular class students also, handwritten notes were not yet sent. Okay, it will take another 5-6 days to dispatch from here for handwritten notes. So now chapter 6A deductions. What is it, sir? Aggregate of all the deductions shall not exceed gross total income. Then no deduction under chapter 6A is allowed on special incomes like 112A, 112 and 111A. We did an example also. Then deductions could be of two types. One is like payment kind of. You make some payments, you make some investments. There is no inflow to you currently, but you made some payments or investments. To encourage such kind of payments and investments, deductions will be given. So straight away you claim how much ever is eligible. The second way is like their incomes, and then deduction also has been given. Since their incomes, first included them in the respective head. Then claim whatever is the deduction after doing at the place of deductions only. Straight away you cannot net off, sir. Deductions point, if they are income based deductions, first you took the full income under respective head. Then after computing gross total income, you claim deduction. After computing gross total income, you claim deductions to the extent allowed. Then following deductions are allowed only on filing return of income. Sir, okay, if you file belated return, then these deductions can't be claimed. Audit report can be filed belatedly, but return has to be filed within the due date. What are those 80 I series like IA, IAB, IAC, IB, IBA, IA, etc. JJA, JJAA, LA, ITM, P, QQB, RRB. Then 80cc. What does 80cc say, sir? 80cc gives the overall deduction applicable under 80C, 80CCC and 80CCD subsection 1. So what is the maximum deduction that can be claimed under all these three sections together? 1,50,000. Then we have discussed the deductions that are available under 80C. 80C is eligible for individual and HF. The maximum deduction under total 80C could be 1,50,000. So first one is like premium paid for life insurance. So okay, with respect to whom the premium can be paid? Individual for himself, spouse, children, whether they are major or minor, parents not covered here. HUF with respect to any member. Okay, then how much is the deduction available? Sir, it depends on when the policy has been taken. Policy issued up to 31st March 2012. Premium paid or 20% of the sum insured, whichever is lower. From 1st April 2012, sum insured premium paid or 10% of the sum insured, whichever is lower. From 31st March, from 1st April 2013, if SC is a disabled person, then the deduction available is premium paid or 15% of the sum insured, whichever is lower. Any contribution to unit linked insurance plan, contribution to deferred annuity, employees contribution to PPF, SPF, RPF. Okay, PPF, sir, SPF and RPF should be for individual own contributions only. Only PPF can be made by individual for himself, spouse and children. Okay, HUF, it can be contributed for any member. That applies only for PPF, sir. SPF na statutory provident fund, that will be contributed only for employee. RPF also, only employee can contribute. For your family members and all, you cannot do. But PPF na, you can do for yourself, your family members also, you can make contributions to the PPF. Then, contribution to approved superannuity fund, any sum paid or deposited to Sukanya Samruddhi account, subscription to National Savings Certificate, contribution to approved annuity plan of LIC, contribution to notified units of mutual fund, then payment of tuition fee with respect to university, college or school should be full-time education in India, maximum 2 children. Then repayment of housing loan. Okay, from the housing loan, sir, the principal part paid can be claimed as deduction. Okay, the loan should be taken from a government, bank, society, LIC or from a government. Then subscription to certain equity shares and debentures, investment in 5-year term deposits, subscription to notified bonds of NABARD, contribution to National Housing Bank term deposits, investment in 5-year post office time deposit, and then even deposit in senior citizen savings rules. All these are eligible for ATC. Okay, we cannot remember all this, sir. What I said, 5-year post office term deposit, you should remember, housing loan point, tuition fee, full-time education point, subscription to certain equity shares and 5-year term deposits, then PPF contributions, PPF, SPF, RPF, then LIC premium. Okay. Then 80CCC. What is 80CCC, sir? Contribution to pension fund of LIC. Eligible SSC is individual, maximum 1,50,000. Then we discussed what 80CCD. 80CCD. 80CCD is about what? Contribution to pension scheme, NPS, and newly added one is like NPS Vatsalya account also. Okay. So now what? There are 3 subsections here. 80CCD subsection 1, 1B, 80CCD subsection 2. 80CCD1 is about what? Employees contribution, 1 and 1B. Employer's contribution is under 80CCD subsection 2. CCD subsection 2. Okay. So first, employees contribution under 80CCD1, how much is allowed as deduction? If he is a salaried employee, then actual contribution or 10% of salary, whichever is lower. What is called salary? Basic plus DA farming part. If he is any other employee, actual or 20% of gross total income, whichever is lower. SSC is salaried employee, then actual contribution or 10%, others actual or 20% of gross total income. Then here, because of this 10% or 20% percentage cap, or because of that 1,50,000 overall cap, if any amount cannot be claimed as deduction under 80CCD subsection 1, that could be claimed under what? 80CCD 1B to a maximum of 50,000. But under 80CCD 1B, sir, not only the NPS additional amount, even if any amount contributed to NPS, Vatsalya account nothing but for any amount deposited for minor's benefit. Okay, for minor benefit, if any amount is deposited in NPS, that also can be claimed as deduction under 80CCD 1B. Then 80CCD subsection 2 is about what? Employer contribution. Okay, we should take government employer or others. Government employer now, how much is the deduction available, sir? Actual or 14% of salary. Normal, other than government employees. Then we should check again, default regime, old regime. Default regime, again, actual or 14% of salary. Old regime means actual or 10% of salary. So 80CCD subsection 2 is available even under the default regime. Then 80CCH, contribution to Agnipath scheme. This is for what? Army people, sir. So even those Agniveers, okay, those are classified as Agniveers, they can contribute on their own, and the equivalent amount will be contributed by central government also as employer. Okay, 80CCH subsection 1, subsection 2. Okay, irrespective of how much amount is contributed, that is eligible for deduction. Whereas 80CCH subsection 2 is eligible under both default regime as well as old regime. Then 80D, medical insurance premium, contributions to national health scheme and preventive health checkup. Sir, what contributions you can do? Medical insurance premium or health insurance premium you can take. Contribution to National Health Scheme. And third one, preventive health checkup. Okay. How much is allowed totally? For individual and his spouse, children together, 25,000. Parents another 25,000. If they are senior citizens, either parents or individual, then this 25,000 limit will be counted as what? 50,000. Only when the senior citizens are resident senior citizens, then the 50,000 benefit is applicable. Otherwise, 25 only. Then within this 25 only, there is a sublimit for preventive health checkup. How much? 5,000 rupees is the sublimit. Okay. This health insurance premium, contribution to National Health Scheme, all these has to be made in any mode other than cash. Whereas preventive health checkup can be made even through cash also. Then, if any premium is paid in lump sum, then how do we claim the deduction? The premium paid in lump sum has to be apportionated throughout the tenure of the policy, and every year equal amount can be claimed as deduction. Then for senior citizens unable to get medical insurance, if he is a senior citizen unable to get medical insurance, then actual medical expenditure also can be claimed as deduction up to an extent of 50,000. Then 80 TD, medical treatment of disabled, and disabled is dependent. If SSC himself is disabled, then 80 U. Okay, so who are called as dependents here? For individual, spouse, children, parents, brothers and sisters. HUF any other member. So, okay, so the payment may be for medical treatment or even for paying insurance premium for the maintenance of dependent disabled. What is the deduction available, sir? 75,000 normal case, 1,25,000 in case of severe disability. It is a flat amount, sir. Irrespective of amount spent, they can claim 75,000 and 1,25,000. Same under 80U also. But 80U, SSC himself is disabled. 80D, SSC is fine. 80DD, SSC is fine. But his dependent is disabled. Okay? They need to submit a proof of disability also. Then 80DDB, when SSC or his dependent is suffering with a specified disease chronic in nature. Who are called dependents, sir? Spouse, children, parents and brothers and sisters, if they are dependent on SSC. How much is the deduction, sir? If the person suffering with specified disease is senior citizen, then 1 lakh. Other than senior citizen, then the deduction is 40,000. Sir, here it is not flat deduction. Actual amount are 40. Actual amount are 1 lakh. Whichever is lower can be claimed as deduction. Then 80E, education loan related. Sir, education loan should be taken for what? Higher studies. From where it should have been taken? It should have been taken from charitable institution or financial institution. Only individual can claim this deduction. Higher studies means above 12th. Okay. Then the interest part is eligible for deduction. How many years? The first year in which interest start accrued and another 7 assessment years. Nothing but overall 8 assessment years it is eligible. Then 80EE and 80EAA. Sir, what is 80EE and 80EAA? If the house, okay, both are with respect to interest being interest on acquisition of house property, that interest can be claimed as deduction. Sir, but that interest already we can claim as deduction under where? House property 24B we can claim as deduction. Let out no limit, self-occupied up to 2 lakhs we can claim. In addition to that one, so let's say you have interest of 3 lakhs, but under 24B you can claim how much? 2 lakhs only if it is a self-occupied property. The extra amount can be claimed as deduction under 80EAA and 80EAB on satisfaction of the conditions. Okay, both these deductions are eligible to individuals only. Under 80EE deduction is like 50,000, EAA 1,50,000. EE loan should be taken in 16-17, whereas EAA loan should be taken in 19-20, 20-21, 21-22. Loan should be taken from bank and financial institutions only. Under EE, the purchase price should be within 50 lakhs, whereas EAA, the stamp duty value should be within 45 lakhs. And under EE, the loan amount should be within 35 lakhs. Okay. Then the other condition is like on the date of sanction of loan, SSC should not have any other residential house property. This should be the only residential house property he is having. Then he can claim deduction under 80E and 80EAA. Then 80EB is what? Interest on loan taken for purchase of electric vehicles. Again eligible for individual. Amount of deduction is 1,50,000 or actual interest, whichever is lower. Conditions: loan sanctioned by financial institution between 1st April 19 to 31st March 2023. Then sir, we discussed about 80G. Sir, what is about 80G? Okay, under 80G, how many categories are there? 4 categories are there. Category 1, how much is the deduction available? 100%, no limits and all. Category 2, 50% flat. Category 3, 100% but subject to qualifying limit. Category 4, 50%, again qualifying limit conditions are there. Now in category 1, what are covered? This PM, CM relief funds, National Development and all, Children Fund, Development, those, Swachh Bharat Fund, Clean Ganga Kosh, Clean Ganga, Swachh Bharat Kosh, okay, and Army, Defense related, all these are covered under what? Category 1, 100% deduction. Category 2, only one fund is there, sir. PM Drought Relief Fund. Category 3 again, 2 are there. One is family planning related contribution to government or local authorities or charitable institutions for family planning. Sports development to Olympics Association or for any other sports authority. The last one, category 4, sir, to any charitable purpose, renovation of temples, and the third one is for uplifting the minorities' interests. Okay, so for all these, if any contributions are made, respective categories are applicable. Now, 1 and 2, no problem, sir. You can identify it as category 1 and 2, na, straight away claim 100% or 50%. Category 3 and 4 only we have a problem. What? Category 3 and 4, we cannot claim how much ever amount we want. I mean, directly 100% and 50%. They are restricted to qualifying limit. So what is qualifying limit? 10% of adjusted gross total income. How do we arrive adjusted gross total income? First take the normal gross total income. If any special rate incomes like capital gains under 112, 112A and 111A and lottery betting incomes are there, subtract them. Then subtract all the other deductions except 80G. Then if any 10AA related incomes are there, 10AA, okay, that also subtract. Then you will get what? Adjusted gross total income. Multiplied with 10%, you will get qualifying limit. From qualifying limit, first claim category 3. Category 3, how much, sir? 100% subject to qualifying limit. First claim category 3. Then the balance in qualifying limit, category 4. Okay, category 4 amounts multiplied with 50%. Balance in qualifying limit also multiplied with 50%. Whichever is lower can be claimed as deduction. Then 80, okay, this is what we completed yesterday, sir. From 80GG we need to start now. Okay. Deduction with respect to rent paid. Sir, for salaried employees, they'll get HRA benefit. HRA is eligible for exemption. Metro city, non-metro city. Metro cities in a 50% of salary, actual HRA, rent paid minus 10% of salary. Non-metros na 40% of salary, actual HRA, rent paid minus 10% of salary. Whichever is lower, eligible for exemption, not deduction. That is eligible for exemption at all. Okay. Then for self-employed, there is no such kind of exemptions available. Okay. So to encourage or to provide certain benefit even for self-employed also, there is a section called 80GG. Okay. So what is this one, sir? Individual not receiving HRA. Deduction is actual rent or actual rent minus 10% of adjusted total income, 25% of adjusted total income. Sir, there rent paid minus 10% of salary. Here rent paid minus 10% of adjusted total income, 25% of adjusted total income. There 40 or 50% of salary HRA. Here 25% of adjusted total income. The third one is 5,000 per month. So out of these three, whichever is lower, eligible for deduction. Understand, sir? Actual rent minus 10% of adjusted total income, 25% of adjusted total income, 5,000 per month, whichever is lower. How do we calculate adjusted total income? Gross total income. From there subtract capital gains, 112A, 111A, nothing but special rate incomes, and even Chapter 6A deductions except 80GG. Okay, then you will get the adjusted gross total income. Now, basically, you will get a question like, sir, what if in the same question 80G is there and even 80GG is there? How do we compute adjusted gross total income? I didn't see a question like that till now. But if it is there, now first you should do for 80G because series wise. Then for computation of 80GG, even you should subtract 80G amounts also. But don't expect such kind of questions will not come. First of all, deductions, there is no 7 marks question at all. They'll ask for MCQs. Okay, for that MCQ, they'll not go and focus on that particular deduction so much. So it's not much important. But the conditions are what? Accommodation occupied by SSE, spouse, minor, children, or HUF shall not own any other accommodation. Okay, accommodation occupied by whom? SSE, spouse, minor, children, or HUF. And they shall not own any other accommodation. Then they file a declaration that paid rent. These conditions has to be satisfied. Then 80GGA, donation for scientific research and rural development. Sir, you are contributing for scientific research or rural development. If you are already into PGBP, if you are already into business, for these two sections, they are already covered under PGBP also. In PGBP, section 35 is about scientific research and 35 series only CCC, okay, is about rural development. So these are already covered where in PGBP, if you are having business income. So that's why 80GGA is not applicable if you are having PGBP income. Okay, if you are having PGBP income, there itself you will claim deduction. If you are not having PGBP income, let's say you are a salaried person, then where you will claim. But still you want, you are someone who wants to encourage the scientific research and technologies. So you made some donations, but you are not having PGBP income. But you made donation, right? So, okay, and that is a good thing which has to be encouraged because India is lacking what? The new innovations and new technologies. So for that, everybody has to contribute for scientific research. If they contribute, there should be appreciation. How the appreciation will be provided? So the appreciation will be provided by way of 80GGA. Okay, any SSE who does not have PGBP income can claim deduction how much? 100%. However, greater than 2000, you should make the payment through other than cash. Other than cash. Sir, then 80GGB and GGC are important, sir. These points will come again in PGBP. That's why. Companies contributing to political party. GGB is about companies contributing to political parties. GGC is about other than companies contributing to political parties or electoral trusts. Okay, first thing. Sir, if a foreign company contributes, it will not get any deduction. The company making donations to political party should be what? Indian company. Deduction is how much? 100% of the amount contributed. Okay, so for what they can donate? Directly to effect public support to political party, or they can incur expenditure with respect to advertisement to political party. Okay, for political parties promotion, they may put the hoardings and all. They may advertise about the political parties in newspapers and all. That expenditure is met by what? Company. Okay, so direct donation is what? Directly you giving 10 crores to your political party. That is also eligible for deduction. Second thing, you are not giving directly, but you are spending for the programs of political party. Let's say you keep hoardings or you put, you make some advertisements through newspapers. That expenditure is also eligible for deduction, provided such company should be what? Indian company, and the contribution should be other than cash. Sir, GGC there is a difference. Deduction in respect of contribution, any person other than company, sir, 100% of the amount contributed is eligible. But if anything is spent on advertisement, not eligible. So amount spent on advertisement of political parties is eligible under 80GGB if it is an Indian company. Okay, for other persons, there is an individual who contributed to political party, allowed as deduction, but he spent some advertisement expenditure for a political party, that is not eligible for deduction because under 80GGC only contributions are allowed, not the expenditure spent on advertisements. Sir, you can see Sir, if you want to write in the material also, make it clear. 80 GGC, you can clearly specify that expenditure on incurred on advertisement of political party not allowed, not eligible. So next one, sir, we are moving on to 80JJA. Deduction with respect to profits or gains from business of collecting biodegradable waste. So the business is what, sir? Collecting this biodegradable waste. So any person engaged in collecting and processing of biodegradable waste. Okay. So with that waste collection, what they do? They'll use it for generation of power or for production of biofertilizers or for producing biogas or for producing fuel or organic manure. So this is some business which has to be encouraged because there is a lot of plastic waste and other waste being dumped across the country. So any companies, or any person who starts business by collecting those waste and then using it for productive purposes like generation of power, production of biofertilizers, biogas, organic manure, then they has to be encouraged. That's why what they said, if any person is into that business, then for him 100% of their profits are eligible for deduction. How much ever profit they make, that is eligible for deduction. That means they need not to pay any tax also. Okay, from that business, whatever the profit they make, that is not taxable, 100% eligible for deduction. But how long? For 5 consecutive assessment years starting from the year in which business commenced. So first 5 years, how much ever profit they make, that is eligible for deduction. Which business, sir? Collection of biodegradable waste and processing it for generating power, biofertilizers, biogas, fuel, organic manure. Okay, don't ask me how it will be generated. That's not my job. 80JJA, deduction with respect to additional employee cost. Okay. Sir, we always talk about what? Unemployment, because India is a place where we have a lot of population than compared to the opportunities. So that's why we always listen about the unemployment. So now government has to do something, at least, okay, they have to do something to reduce at least or to reduce the percentage of unemployment. One such kind of thing is only deduction with respect to additional employee costs. So what they are saying now, you are a business or you are an industry. If you recruit new employees in this year, you will incur some extra cost for recruiting new employees. On that extra cost, we'll give certain percentage as deduction for you. Sir, let's say you incurred for new employees 5 crores as salary. For the new employees recruited, 5 crores as salary. Already these 5 crores you will claim as expense, PGBP. In P&L, this 5 crores already you will claim it as expense. Not only 5 crores, for 5 crores, they'll give you extra amount also to claim as expense. Let's say 30% it is mentioned. So 5 crores actual expense. Another 30%, another 1.5 crores you can claim as expense, even though it is not an expense. Sir, you have 10 crores profit, sir. How you got 10 crores profit? After claiming 5 crores as salary expense. Now you should pay actually tax on what? 10 crores. But since you have been taking new employees, the government said like what? Out of the total employee expense, 5 crores, multiplied with 30%. How much? 1.5 crores. That you claim as deduction. So instead of 10 crores, now how much is taxed? Only 8.5 crores is only being taxed. The other 1.5 crores related tax benefit you are getting for recruiting new employees in the current year. Are you able to understand, sir? So government wants to encourage the business organizations, companies to recruit new employees every year. Okay, for that what is the benefit they'll get? They can claim extra deduction. Not only the salaries they paid, in excess of the salaries they paid, another 30% they can claim as deduction. That is not only in the first year, sir. If new employee has been taken, in the first year, extra 30% they can claim deduction. Second year also extra 30%. Third year also extra 30% they can claim as deduction. Let's say, sir, I recruited one employee. His salary 12 lakhs. Now actually I'll claim expense as how much? 12 lakhs. But what they are saying, like, not only this 12 lakhs, extra 12 lakhs into 30%. Another 3,60,000 I can claim as deduction in the first year. So for 12 lakhs expense, I am claiming 15,60,000 as deduction. Understand, sir? అర్థమవుతుందా అండి? ఇన్ సింపుల్ మనకి అకౌంటింగ్ లాంగ్వేజ్ అంటే, ఇన్ అకౌంటింగ్ లాంగ్వేజ్, ఫర్ 12 lakh rupees expense you are debiting 15,60,000 in P&L. ఓకే, మన P&L ఎక్కువ డెబిట్ చేస్తే ఏమవుతుంది? Your profit will come down. Okay, the same thing we are doing. Actually you should debit how much? 12 lakhs only. 12 lakhs is only your actual expense. But what this section is saying, like, extra 30% you can claim as deduction. Extra 30% na, that also you will debit to P&L. So instead of 12 lakhs you are claiming 15,60,000 as expense or deduction, so that your profit will come down. When your profit comes down, even your tax also will come down. Understand, sir? So okay, now we'll go into the conditions here. To whom this deduction is available? SSE is engaged in business and to whom tax audit should be applicable. Okay, just because he is into business now, not applicable, sir. Okay, he should be in business and for him tax audit also shall be applicable. What is the deduction available? 30% of additional employee cost. How much? 30% of additional employee cost. Sir, now we need to find out what is additional employee cost. So additional employee cost, now you should find out how many new employees has been recruited. Sir, the point is, year opening 500 employees are there. Okay, in the year 200 employees are joined, but 100 employees left. The closing will be how much? 500 is opening, 200 newly joined and 100 left. What is the closing? 600. So opening to closing, if you compare, how much is the increase? 100. So the additional employees will be considered as only 100, not 200. Okay, it's not just based on new joinings. Okay, otherwise now what every company will do, sir, for this deduction they'll hire 10 people and then again they'll remove some other 10 people and will be claiming this deduction. That's why what they are saying, na, opening to closing you compare. If there is an overall increase in the employees, that number you take which is eligible for additional employee cost. Okay. Then total, see, there should be overall increase of employees on last day of previous year. See, 1st April 25, how many are there, sir? 500. In 25-26, 100 joined, but 120 left. So total closing is how much? 480. Is there any increase? From 500 to 480 it came. So there is no additional employee cost deduction available here. Okay, but if there is an overall increase compared from opening to closing, then additional employee cost deduction will be eligible. Okay, sir, let's say for example, what example we took? Opening 500, newly joined 200, 100 left. By ending, how many are there? 600 are there. So total, how many employees are newly joined, sir? 100. Okay, so 100 employees. Now we should check what is the total salary per month for each employee. Sir, out of this 100 employees, sir, 20 employees, 20 employees. Okay, 20 employees out of 100 employees, sir, 20 employees, their salary is like 40,000 per month. Their salary is how much? 40,000 per month, which is more than 25,000. So these people are not eligible again. Okay, sir, again their focus is to create opportunities or employment for unskilled people rather than skilled workforce. Okay, skilled na, their salaries will be mostly more than 25,000. So government is not focused on creating opportunities for skilled people because he is already skilled. He can get anywhere. So they wanted to create opportunities for whom? Unskilled people. Okay, that's why if emoluments are nothing but salary, perquisites, allowances, all together, that amount we call it as emoluments. If it is within 25,000, then fine. More than 25,000, then those employees are ineligible, will not count them. Total 100 employees is the overall increase. Out of them, 20 employees became ineligible. Why? Because their salary is 40,000 per month. See, the total emoluments, employee total emoluments, sir, here look at this sentence. Excludes, will exclude whom? Whose emoluments are greater than 25,000. Here 40,000, that means more than 25,000, so exclude them. Okay, now rest how many are there? 80, sir. All these 80 employees' salary is like 20,000 per month. Okay, now out of this 80 employees, 10 employees, the salary is paid in cash. Their salaries are paid in cash. If they are paid in other than specified modes, what are specified modes? Account to pay check, account to pay draft, electronic clearing system. If other than these three modes, if through any other mode the amount is paid, then those employees are also ineligible. For these 10 employees, how it is paid, sir? Cash. So these are also ineligible. So how many are there? 70 are there. Now out of this 70 employees, sir, 20 employees are not participating in PF. They are not participating in PF. For them, there is no PF contributions, no PF account and all. If they are not participating in PF, then they are also not eligible. So how many balance are there? 50. The last condition, sir, we should check how many days they worked in a year. They should have worked minimum 240 days. Minimum 240 days. Greater than 240, okay, less than 240 days. Here greater than 240 days. Sir, 5 employees worked less than 240 days. So they are also what? Ineligible. So total finally how many are eligible, sir? 45 employees are eligible. Now find out what is the total salary for them. 45. Assume, sir, they are throughout the year. 1st April itself they have joined. So 45 employees into 12 months into each salary how much, sir? 20,000. 45 into 12 into 20,000. 1 crore 80 lakhs. This is what? Additional employee cost. 1 crore 8 lakhs. Okay, this is what? Additional employee cost. Sir, the total additional employee cost is eligible for deduction. Huh? Only 30% is eligible for deduction. So into 30% now how much? 32 lakh. So 32 lakh 40,000 is only eligible for deduction out of the additional employee cost 1 crore 8 lakhs. Sir, are you able to understand? There should be overall increase. Next one, their emolument should be within 25,000. Their payment should be made in specified modes. They should be participating in PF and they should have worked for a minimum of 240 days. However, sir, for 240 days there is an exception. If the industry or the business is related to manufacturing of textiles, wearing apparel, footwear, leather industries, then 150 days is also enough. Okay, footwear, leather, apparel industries, they need not to work 240 days, even 150 days is also enough. So where it is mentioned, see. Employed for less than 240 days in previous year. Less than 150 days in case of footwear, apparel and leather industries. Then if employed in previous year 24-25, sir, actually it is 25-26 we should write. Okay, correct it, sir. Employed in previous year 25-26, worked for less than 240 days or 150 days, then 80 JJA can be availed from previous year 26-27. Okay, so even though they joined in the current year, since they worked for less than 150 days, for them the first year will be counted as what? The next year. They joined in 25-26 only, but they worked for only 1 month. So for 25-26 they are not eligible. But for 26-27 onwards, they will be counted as additional employee cost. Okay. Sir, then 80 LA, sir. 80 LA is with respect to incomes of offshore banking units in international financial centers or offshore units. Sir, offshore units are nothing but, sir, every company, most of the companies, when there is scope, they'll do exports. But banks are missing that scope to do exports. Mostly Indian banks are restricting their business within India only. So they're giving loans, they are giving advances, they are accepting deposits only within the India. But it is restricting their scope, right? So if they wanted to become a global bank, okay, they wanted to extend their operations even outside India, then they should accept deposits from foreign institutions and foreign public also, and they also should lend loans to the foreign people also. To facilitate that only, they said what? Deduction in respect of offshore banking unit. Offshore banking unit, SBI, State Bank of India, if it is having a branch in London, then that is nothing but offshore unit. Okay, so scheduled bank has an offshore unit in SEZ. Sir, what is offshore unit in SEZ? Sir, in SEZ area, they'll open a branch. Okay, but this branch, mostly they'll deal with foreign currency itself, instead of dealing it in Indian currency and all. They'll lend in foreign currency, they'll accept deposits in foreign currency, all that. So, from those offshore unit, if they get any incomes, those are eligible for deduction. Same way, sir, foreign bank also has an offshore unit in SEZ. That also eligible for deduction, 100% of profits for 10 years. Then, units of an IFSC. There is something called International Finance Service Center, sir, which is there. Only one IFSC is there in Gujarat, Ahmedabad. There is one IFSC. IFSC, International Finance Service Center, like it's a place where the Indian banks can mostly operate like just like as a foreign bank only. Okay, they can freely deal with foreign clients. They can lend transactions and they can do transactions with the foreign clients and the outside India clients also freely without any kind of restrictions. So this is something like a SEZ zone only. Normal SEZ, manufacturing units will be there. IFSC, it is a separate area for banks which were mainly focused on foreign clients only. So if it is a bank unit which is located in IFSC, so whatever is the income from that IFSC unit, 100% of such income is eligible for deduction for 10 assessment years out of 15 assessment years. Okay, so mostly this is nothing but banks doing exports. This provision is mostly like banks doing exports. Since they are doing exports, they are, sir, what bank will earn? If they lend outside India, they'll earn interest from outside India. So foreign currency they are earning. So to encourage them, they are giving this deduction under 80 LA. Okay, then 80M. 80M important, sir. And 80M, sir, it has to be linked with section 57 in IFOS. And these points are linked in a question already in June 2025 question. This point has been linked and asked in tax planning chapter. In tax planning chapter, in June 2025 question, it's a simple question only. And for June 2025, 80M is newly introduced. So everybody knows that it is an amendment. It can be tested. But most of the students again did mistakes there. See, what is the provision, sir? If he is an eligible SSE, nothing but domestic company. It is a domestic company. Domestic company, sir, it is receiving dividend from some other companies. And even if it is paying dividend to its shareholders, then there is a deduction available. What? Dividend received from other companies or dividend distributed on or before due date of filing return of income. Out of these two, whichever is lower can be claimed as deduction. Sir, but it applies only for intercorporate dividends. Intercorporate dividends, sir, there are a chain of companies, same group, chain of companies. Okay, so now what happens? Sir, the whole shareholdings belongs to the same chain of companies only. So I have shareholding in X company, whereas my shareholding is held by Y company. Understand, sir? So now from X company, whatever the dividend distributed, again I will be distributing it to some other companies. So I am doing what? From one company I got profit in the form of dividend, then again I am declaring it to other companies in the form of dividend. In that case, I am eligible for deduction to avoid double taxation, sir. This one, sir, profits already taxed. After taxing only, they will give it as dividend.
So dividend again it is getting taxed in my hands. Okay, now if again I distribute it to someone else, for them also again it is getting taxed. So to avoid these multiple taxations, they are giving a deduction saying like, I can claim deduction to an extent of what? Dividend received or dividend paid, whichever is lower. Okay, sir, I have only dividend received, then this deduction is not available. You should have both. You have received dividend and you paid dividend. Then whichever is lower can be claimed as deduction. Understand? Sir, one important point, sir. To earn a dividend, sir, how this company earning dividend? So this company, let's say X Limited, here Y Limited. X Limited has 20% shareholding in Y Limited. Now Y Limited paid 30 lakhs as dividend. 30 lakhs as dividend. Now again, X Limited paid to Z Limited 28 lakhs as dividend. X Limited again paid to Z Limited how much, sir? 28 lakhs as dividend. Sir, ideally what will say as ATM deduction? Dividend received 30 lakhs, dividend paid how much? 28 lakhs. Whichever is lower now, how much you will claim as deduction? 28 lakhs you can claim as deduction, right? But the extra point they'll say is what? X Limited, sir, to make this investment in Y Limited, it took a loan. Loan to invest in Z. Sorry, to invest in Y Limited. On that loan, there is an interest of 5 lakhs. On that loan, there is an interest of 5 lakhs. Now, if you go to IFOS chapter, because why dividend is taxable under which head? Other sources. There what it is said, to earn dividend income, if you incur any expense, such expense can be claimed as deduction, only interest expense. No other expense incurred to earn dividend income can be claimed as deduction other than interest. Sir, you are accruing interest here to earn dividend. Why? You don't have money to invest in company. So what you did? You took loan and invested. So to earn that dividend, you are incurring what? Interest. So the interest is relevant to which income? Dividend income. Okay. So now how much is the expense? 5 lakhs. Can we claim total 5 lakhs as expense from dividend? That is the second question. So what they said, the provision said like actual interest paid or 20% of the dividend, whichever is lower can be claimed as expense. So once again repeating, sir, how much? Actual interest paid or 20% of the dividend. Sir, how much? 30 lakhs into 20%, 6 lakhs. Whereas actual interest is how much? 5 lakhs only. So no problem, 5 lakhs can be claimed as deduction. So 30 lakhs minus 5 lakhs if you do, what is the net taxable dividend, sir? 25 lakhs is only the dividend taxable. So now what is the ATM deduction? The ATM deduction is 25 lakhs or 28 lakhs, whichever is lower. So the deduction available is only 25 lakhs. Deduction available is only 25 lakhs. So what is the point we did? First, if you have dividend income, you can claim interest expense alone. That also how much you can avail? 20% of the dividend or actual interest, whichever is lower can be claimed as expense. Okay, fine, done. Then if you want to claim ATM dividend, you cannot compare gross dividend received with dividend paid. You should compare with what? Net dividend taxable. What is the net dividend taxable here? 25 lakhs. Or the dividend paid, 28 lakhs. Whichever is lower can be claimed as deduction under ATM. How much, sir, it is? 25 lakhs can be claimed as deduction under ATM. Hi, Himanshu. Yes, there was a delay in dispatching the books, but currently all the books except the orders which were made in the last 2 days, like March 3rd and 4th, rest all the other books has been dispatched with respect to DT. Okay, so you will be receiving the books in coming 1 or 2 days mostly. And the dispatch also has been made. Okay, some books were dispatched like 1 week before, like 6 days, 5 days. Okay, so they are, and most of the students from last 3-4 days they have been receiving the books, so you will also receive within 1 or 2 days. Then sir, 80P. Sir, in 80LA, if you see here, in the book you got, here there is a point also mentioned there as amendment. If you remember, check 80LA. Is it there or not? So this point will be there. Transfer of an aircraft ship leased by a unit in IFSC, and such unit has commenced operation up to 31st March 2030. Nothing but this date used to be only 31st March 2025 previously. Now this date has been extended till 31st March 2030. That's the amendment there. Okay, the date, the sunset date has been extended from 31st March 2025 to 31st March 2030. Sir, if you are a regular student, then in your notes, this point will not be there. So write down this point in your notes also. Transfer of an aircraft ship leased by a unit in IFSC, and such unit has commenced operations up to 31st March 30. Right. Then we are moving on to 80P. Not much important, sir, for us. Just I'm reading here. 80P, deduction in respect of income of cooperative societies. So cooperative societies, sir, it may have specified incomes. If it is specified income, 100% deduction is available. What is specified income? Providing credit to its members, marketing agri produce of members, purchase of seeds, livestock for supply to members, processing agri produce, collective disposal of labor, cottage industry, fishing and other allied pursuits. From that, if any income is earned by cooperative societies, then 100% amount of profits are eligible for deduction. If they have any interest or dividend income, that is also eligible for 100% deduction. If they have any income from letting out of warehouses, a cooperative society has built a warehouse, and in warehouse they are using for, warehouse will be rented. From that they are earning rental income, that is also eligible for 100% deduction. Then other incomes, if it is a consumer cooperative society, up to 1 lakh on other incomes they can claim deductions. Okay, if it is other than consumer cooperative society, maximum 50,000 they can claim as deduction. So if it is a cooperative society and if it has income from these kind of operations, then 100% eligible for deduction. And additionally, if they have interest and dividend income, that also 100%. If they have a warehouse, from warehouse whatever the income they earn, 100% eligible for deduction. So other than these activities, if they have any other activities, then depending on which kind of society it is. If it is consumer cooperative society, 1 lakh deduction, others 50,000 deduction. Okay, so don't ask me more detailedly also, it is not that much important also to go detailedly. Then 80 QQB. 80 QQB. Deduction on royalty income. 80 QQB deduction on royalty income. So till now, if you remember, we said like deduction is available only to residents under 80 DD, 80 U and 80 DDB. Okay, only those three sections. Then if you remember, 80 GGB, contribution to political parties by companies, there we said like domestic companies. Okay, rest all the other places we didn't mention like deductions are available only to residents. So they are available to both resident as well as non-resident. Whereas 80D, 80 DD, 80 U, 80 DDB are eligible only for residents. What are those, sir? Sir, even if you don't remember section numbers also, suffering from disability, two sections are there. And then dependent one, SSC himself one. Then the next one is what? Suffering with specified disease. Okay, those 3 points are eligible for deduction only if SSC is a resident. Okay, then contribution by domestic companies to political parties. Domestic company, by name, domestic company itself is what? It is a resident only. Okay, now the same way here 80 QQB. 80 QQB. So what is 80 QQB? You are an author. Okay, you are an author of books. Okay, and for giving your writings for publishing or using for some other purposes, you are getting royalty. Getting royalty. So now that royalty income, how it is taxable? Eligible SSC is resident plus individual. He has received royalty with respect to work of literature, artistic and scientific nature. Sir, just I'm also author for a DT book and IDT book, but I will not get, if I get royalty also, I will not get 80 QQB deduction, because it is education related books are not covered here. They should be meant for literature. Literature, something like Shakespeare, they wrote, right? So they'll come under literature. Then artistic nature. Okay, some poems kind of and all. Okay, Ravindranath Tagore. So, okay, they wrote some poetic things and all, right? So this, or it should be related to scientific nature. In my tax book, literature not there. It is not even artistic, even though I used good colors, charts and all also, but still it doesn't count as artistic. And obviously there is nothing scientific. So it's not covered, not includes textbooks, newspapers and then magazines. Okay, so it should be related to literature, artistic and scientific nature. Now, royalty could be paid in two ways. One thing, they may pay me lump sumly and settle for one time. Okay, then they can use it for 5 years, 10 years, that is their thing. Okay, usually this happens when the author is not famous. Okay, those are my new works. Then what? I don't know how much potential I am having also. So even the buyer also doesn't know how much is my market. So he'll pay me some lump sum amount like 2 lakhs, 3 lakhs and all, and he'll take the copyright of that and he'll be publishing everything. If he gets more revenue, that is his profit only. If once they got fame, then they'll not go for lump sum, sir. They'll go for yearly payments. Like yearly, how many copies you sold? Okay, how much revenue you made? Out of that, how much percentage you are giving? So like that, yearly the payments will come. Okay, so lump sum, if at all you received lump sum, then the deduction is 3 lakhs or actual royalty, whichever is lower. If it is like yearly payment kind of, then gross royalty received or 15% of sale value of books, whichever is lower. But for us mostly, sir, this lump sum point only will be there in the questions. Actual royalty received or 3 lakhs, whichever is lower, eligible for deduction. However, if it is yearly, sir, 15% of gross sale value or actual royalty received, whichever is lower, eligible for deduction. Okay. To claim this deduction, SSC should be resident or non-resident? Resident. If he is a non-resident, he is not eligible for deduction. So now, sir, I am a resident only, but my writing, let's say I wrote a book, something like, okay, something like Harry Potter kind of, or Marvel kind of, this Avengers kind of. I also wrote some kind of fictional stories and all. Then Hollywood wants to make a movie on this. So they are paying royalty to me for my work. Okay. Now where my income is accruing, sir? Outside India. Even though it is outside India, I am resident only, I can claim deduction. Okay. Even though my income is from outside India, I am actually a resident only, so I am eligible for deduction. But the thing is, since I received outside India, I have to bring that foreign money into India within 6 months. Within 6 months, I have to repatriate that money into India. Then I am eligible for 80 QQB deduction, right? Then 80, see this one, 80 QQB or in 80 RRB, income earned outside India should be repatriated within 6 months from end of previous year in convertible foreign exchange. Then 80 RRB, it is with respect to deduction of a patent. Sir, for what we can take patent, sir? Patent na, you invented some formula for any, let's say you had like thumbs up, how to manufacture thumbs up Coke, you have a formula. Then further you can take patent for a technology, how to make a bike, okay, or else you invented some technology with water the bike can go for 50-60 kilometers, then you can take a patent for it. So those things, sir. So you are a resident individual and you are the true and first inventor, not copy. So recently one thing happened, sir, India got trolled so much. Okay, recently related to AI and all, artificial intelligence and all, there was a program held, even international, some other companies also has been participated. Now, they asked the universities, the famous universities in India, to put their works, what researchers they have did and what kind of innovations they brought under. Now, one particular university, sir, they brought a Chinese robot and they kept it in the exhibition and claimed it as like they have made it, okay, and that video or that that video has been circulated in the Instagram, okay, and then everybody is saying like this is China robot, how can we say that, or how can you claim? Even Indians only trolled them, okay, not the foreigners also, okay, they only troll, how can you claim something invented by China as ours, okay. Then the total central government has been removed their college from that exhibition itself and all happened, okay. So patent should be what? True and first inventor. You should have invented first, okay. Sir, let's say if you have invented bike now or bulb now, you will not become Thomas Alva Edison, okay, because it was already invented. So you should be what? True and first inventor. For that, if you have any patent, so now you are giving that patent. For that patent, you are getting actual amount or 3 lakhs, whichever is lower, okay. So you should be like whom? Panchapatla Sarangapani. In what? Snehitudu movie. Okay, in Hindi I don't remember his name. Cinema movie name I know. Character name I don't remember. In 3 Idiots, Amir Khan will be there, right? So Amir Khan, he is a true and first inventor. Like what? With the scooter he is doing all that. Washing machine, all these things he'll do. Na? So such kind of true and first inventor, and he has patent. Okay, by giving that patent he is earning money, then that is eligible for deduction. Actual amount are 3 lakhs, whichever is lower. Deduction not available for sale of product with the use of patent. Sir, by using that patent, you only manufacturing and selling the goods. Then deduction is not available. When deduction is available, you are giving away your patent. Then deduction is available. Okay, you should be someone like Vasikar in Robo. Okay, he is a true and first inventor of that robo. So let's say he has given that patent for mass production of robots. Then whatever the money he'll get, then that is eligible for deduction. Actual amount are 3 lakhs, whichever is lower. Then sir, 80 TTA and 80 TTB. TTA. Eligible SSC, whom individual or HUF, and they have income from what? Interest on savings bank deposits. From where the deposit money is there? Either from bank or from cooperative society or from post office. Bank, cooperative society, post office, you are having savings bank account. From that savings bank account deposits, you earn interest. Then that interest is eligible for deduction up to 10,000. Okay. Then 80 TTB. 80 TTB applies only to resident individual again. Resident individual. TTB, resident individual. Previously we have discussed what? 80 QQB, resident individual. 80 DDB, 80 U are also with respect to resident individuals. Okay. Interest on deposits. It could, sir, understand here. 80 TTA na only savings deposit is covered. But TTB na Savings also applicable, fixed deposits also has been covered. How much interest is eligible for deduction, sir? 50,000. So if you are a senior citizen, and resident, you can claim deduction under 80TTB with respect to interest on savings bank account as well as FD interest also, up to an amount of what? 50,000. If you are not a senior citizen, then only interest on savings bank account is eligible for deduction to an amount of 10,000. So then look at this. AOP, BOI or firm made a deposit with a bank, society or post office. AOP, BOI or a firm made deposit with bank, society or post office, and then interest earned can be taken as deduction by member or partner. Sir, understand, sir? The deposit is made by whom? AOP, BOI and firm. But the deduction on that interest is earned. It can't be, sir, not can, can't be taken as deduction by what? Member or partner, because this is whose money? AOP, BOI, firm's money can't be taken as deduction by member or partners. Because AOP, BOI, firm are different, members and partners are different. Okay, so we are almost about to complete, sir. 80IA. Deduction in respect of PGBP with respect to undertaking or enterprise engaged in infrastructure development. Sir, 80IA is one section which was introduced. Sir, for the new ventures, this is not there. Mostly this section covers for the ventures which are started around 2011-12 period. From there on, for the new ventures and all, this section is not applicable. By that time, sir, we were too backward in our infrastructure. Okay, but in this 10-15 years, we have improved so much our infrastructure in terms of roads, metro projects and all. Okay, so this deduction, if anything newly started, this deduction is not there. But they already commenced at that time. That time in 2010, 11, 12, 13, 13, 14, 15, 16, that time they have started. And for them, still the deduction benefits are going on. Okay, so SSE is in what? Is an undertaking or an enterprise engaged in infrastructure development like roads, bridges, ports, and even electric lines. Okay, all this will come. Sir, if they are into roads, bridges, rails, highway projects, water supply projects, 100% of their profits are eligible for deduction for 10 consecutive assessment years out of 20 years. They can choose. Out of the first 20 years, they can choose which year they can claim deduction, which year they don't want deduction. Okay, sir, if that year they don't have much profits, then they'll not claim deductions. In the year in which they have more profits, that year they'll claim deduction, so that they'll have overall tax advantage. Whereas, if they are into any other infrastructure projects other than roads, bridges, railway projects, highway projects, water supply projects, then 100% of their profits and gains for 10 consecutive assessment years out of 15 assessment years are eligible for deduction. But we need to solve problems, sir. There are two problems on this particular concept. One is in deductions chapter only there. The other one is in tax planning also. Okay, you learn new points also by solving the question. So straight away I am taking you to the question. Come to workbook, sir. Question number 8. And there is some contradiction also between this question number 8 and the question in tax planning also. Page number 2.8, sir. Present your answer for the following situations under the headings: issue involved, provisions applicable, analysis and conclusion. So they are asking you to write in 4 steps. Issue, facts, provision, analysis and conclusion. They want you to write in the answer in that format. Okay. So what is the issue first? True Private Limited, Mysore has 2 units. Unit A is in Hubli, Unit B is in Guntur. Okay. Unit A is eligible for deduction under 80IA. During the financial year 23-24, the company earned a net profit of 67 lakh from Unit A. Sir, which unit is eligible for 80IA? Unit A. Okay. And suffered a loss of 24 lakhs from Unit B. Suffered a loss of 24 lakhs from Unit B. So, Unit A is eligible for 100% deduction. Unit B is eligible for what? Unit B doesn't have any deductions and all, but Unit B is suffering with what? Loss of 24 lakhs. Now the point see. SSE claimed 100% of the profits from Unit A, 67 lakhs, can be claimed as deduction under 80IA. However, the AO applied section 80AB and allowed deduction only to the extent of income under the head PGBP. Sir, what is the total income under the head PGBP? 67 lakhs gain they have. And they have lost 24 lakhs now. If they adjust, what is the net income under the head PGBP, sir? 43 lakhs. So, AO is giving deduction to the extent of how much? 43 lakhs only. But whereas SSE is claiming like what? He will be claiming 67 lakhs. Now, what is the correct provision or correct treatment? That is the issue here. Okay. Sir, 80IA we didn't written here detailed. But what 80IA says now? The deduction has to be claimed as if it is the only unit. As if it is the only unit. Okay. Sir, if you think like as if it is the only unit, how much deduction they can claim? 67 lakhs they can claim, right? So now see, whether the deduction under section 80IA of the Income Tax Act should be restricted to the extent of income under that PGBP or not is the question. So profit from eligible unit is 67 lakhs and loss is 24 lakhs. So by doing that, the net income will result in how much? 43. Nothing but issue again explained there, because they asked to write even the issue. Then provision. 80IA says what? 100% of profits derived from eligible business for a prescribed period subject to certain conditions are eligible for deduction. Whereas 80AB states that what? Deduction under 80IA shall be computed with reference to the income of that eligible business only and not the total income. As per the 80AB, the quantum of deduction under 80IA shall be computed with reference to the PGBP and not with reference to the income under any other head. So the profit of unit A 67, which is separately identifiable and eligible for deduction under 80A. Okay, this is the important point. The loss of 24 lakhs from unit B, being a non-eligible unit, is not to be adjusted against the profit of eligible unit for the purpose of computation of deduction under 80IA. So how much is the deduction under 80IA, sir? The total 67 lakhs we can claim as deduction, because assuming that is the only unit we are having. So the deduction can be claimed is how much? 67 lakhs. If that is the only unit we have, we can claim how much? 67 lakhs. So here also we can claim how much? 67 lakhs. So the AO's action of restricting deduction to 43 lakhs is not tenable. Unit-wise computation independent of losses from non-eligible units. Okay. So conclusion see. The action of AO is not tenable in law. It is eligible to claim full deduction 67 lakhs under 80IA, being the profit derived from eligible business. Clear? But one thing, sir. What will be their gross total income? 67 lakhs will be their gross total income. You have to do set off carry forward only, right? Then only you can do what? Gross total income. So if you do set off and carry forward, now how much will be their income? 43 lakhs only. Okay. Now they have to claim chapter 6A deductions. How much is there here? 80 IA. How much they said like claim? 67 lakhs. So can they claim 67 lakhs? So ultimately it is restricted to what again? 43 lakhs only. But under 80IA, if you ask specifically how much they can claim, 67 lakhs they can claim. But ultimately it is also get restricted to 43 lakhs only. Why 43 lakhs? Because the total deductions cannot exceed gross total income. So here also it is restricted to 43 lakhs only. The income becomes 0. Understand, sir? So by reading only this question, you may misunderstood like what? Okay, maybe the deduction can be claimed is how much? 67 lakhs, and gross total income also you may take it as 67 lakhs. That is not correct, sir. So the intention, okay, actually the answer framing itself is poorly framed. They didn't answer it properly. So the interpretation here is like 80IA deduction has to be computed as if that is the only unit we have. Okay, but the ultimate deduction cannot be more than gross total income. Two things we should remember. First one, 80IA deduction has to be calculated as if that is the only unit available. Okay, we calculated. How much is the deduction? 67 lakhs. But the problem is, gross total income we had how much? 43 lakhs. So the deduction is restricted only to the extent of 43 lakhs. Okay. Sir, how can you say that? How you are correct? So there is another question also in supporting, to support my argument. So come to tax planning chapter. In tax planning chapter, come to question number 6, page number 6.4. See here. P Limited owns two undertakings. Undertaking A is eligible for deduction under 80IA and undertaking B are not eligible for such deduction. The date of commencement of operations is both the undertakings is 14th September 2025. The profits earned by both the undertakings are as under. Same like sir, previously only two undertakings. A is what? 80IA. B is not other non-eligible one. Okay. Sir, first year. 24-25. How much is there? Negative 6 lakhs. So deduction available or not available? Not available. Then 25-26. Again loss. Not available. Third year. Sir, if that is the only unit you think, if you think only 80IA is the only unit you are having, you already had the carry forward loss how much? 10 lakhs. Now current year what you will do? You'll set off that losses. So out of the total 10 lakhs loss, you'll set off here. How much will be there? Still 5 lakhs loss will be there. So this year also no 80IA deduction. Where understand sir? We are doing like what? As if 80IA unit is only the one, is only the unit we have. Okay. Then the fourth year sir. Come to fourth year sir. How much is their profit? 8 lakhs. But you have still brought forward loss. How much? 5 lakhs. Adjust this 5 lakhs also. How much is there? 3 lakhs. So this 3 lakhs you can claim as deduction. Then fifth year. 9 lakhs. Yes, 9 lakhs you can claim as 80IA deduction. But what is their gross total income in 28-29? Their gross total income will be only 6 lakhs because non-eligible unit is having 3 lakhs loss. So their gross total income will be only how much? 6 lakhs only. So even though 80IA 9 lakhs eligible, it is restricted to 6 lakhs. Okay. See sir. 28-29. Profit how much? 5 lakhs. Profit from unit B how much? 9 lakhs. What is the gross total income sir? 14. But deduction under 80A, current year profit of unit A is how much? 5. Notional brought forward loss. Sir, why they are referring notional brought forward loss? Because we are assuming as if unit A is the only thing. If unit A is the only thing, then what is the brought forward loss for first 2 years? 10 lakhs. That 10 lakhs you adjust here. Still there is how much loss? 5 lakhs. So for 18, 19, 28, 29, there is no 80IA deduction. Next year you go. Sir, how much is the current year profit in 29-30? 8 lakhs. In 29-30, how much is the current year profit? Sir, see. In 18, previous year 27-28, assessment year what? 28. Okay, so let me change here. Sir, correct this assessment year, sir. Here previous year 26-27 is the first year, right? So it would be assessment year 27-28. Then it would be assessment year 28-29. Then it would be assessment year 29-30. Okay. Sir, in 27-28 assessment year, how much profit they have? 5. That 5 only they have taken here. But assuming unit A is only the unit they are having, then they have already brought forward loss of how much? Minus 6, minus 4, first 2 years. So total how much? 10. If you subtract that 10, how much is the balance loss they are having, sir? 5. So for the first year, no ATIA deduction. Second year if you go. Second year, sir, again, what is the second year profit? I mean, not second year, sir. This is 1, 2, 3. Come to fourth year. Fourth year, what is the profit they are having, sir? 8. But last year still brought forward loss is there. How much? 5. Adjust that 5 also. How much is there? 3. That 3 can be claimed as deduction. So deduction under ATIA is how much? 3 lakhs. Okay. Then last fifth year, sir. Fifth year, how much they have as profit, sir? 9 lakhs. So okay, here 9 lakhs only. There is no brought forward loss also to adjust. So actually they can claim how much, sir? 9 lakhs as deduction. But the deduction cannot exceed gross total income. Sir, if you see, this is the profit from unit A. This is the loss from unit B. If you do gross total income, how much? 6 lakhs. ATIA deduction 9 lakhs you can claim. But the deduction cannot exceed gross total income. So it was restricted to 6 lakhs only. It was restricted to 6 lakhs only. Okay. So the right way is like what? First, for claiming deduction, calculating deduction, you should compute as if that particular unit is the only business you are having. That unit on which you are claiming ATIA deduction is the only business if you are having. How you calculate deduction? Same way, that way you have to calculate the deduction. But ultimately, the deduction cannot exceed gross total income. Understand, sir? Sir, mark these two question numbers are there. Question number 6 from tax planning. Not in workbook, in concept book, link it. If you read, if you are already having notes and if you write, if you refer only notes now, then in notes you put question number. So that immediately you will refer there. If you are referring pulse only, then mark the question numbers there. ATIAC, sir. This question also I'll complete and we can take break. This point. ATIAC. ATIAC is about what? Deduction with respect to PGBP income derived by an eligible startups. Okay. Sir, eligible startups. So it's not like if you start a Pani Puri stall and claim it as like startup. Okay. It should get, to call it as a startup, it should get a certificate from Ministry of Commerce. Okay. We didn't discuss, or it's not needed for us to discuss in detail what conditions to be satisfied to get that startup certificate and all. That is irrelevant for us, at least for the purpose of exam, sir. Okay. So eligibility, sir, it should be either company or LLP. It should have started 1st April 2016 to 31st March 2025. Here also the date has been extended up to, sunset date has been extended up to 31st March 30. Okay, in notes, sir, if it is not there, in notes you can check it, regular students. Company LLP, if it is incorporated from 1st April 2016 to 31st March 2025 is there originally. But in the Finance Act 2025, they extended this date up to 31st March 30. Okay, then their turnover should be within 100 crores in the year in which they are claiming deduction. Then how much is the deduction available, sir? 100% of their profits for 3 consecutive years out of 10 years. Sir, they may claim 8, 9, 10. They may claim 5, 6, 7. But out of the 10 years, 3 years they should claim consecutively. It's not like they'll claim 3rd year and again 7th year and again 9th year. Okay, they have to claim the 3 years consecutively. When they start, it's their choice. They can start from first year itself, or they may wait first 5 years and then claim in 6, 7, 8. That's their choice. If it is an eligible startup. Okay, eligible startup, we need not to learn all those conditions. If there is a certificate from Ministry of Commerce that it is an eligible business, then we'll count it as what? Eligible startup. Eligible startup. Okay, sir, for it. Okay, there is a
Okay, this concept, sir, with respect to problems, this is linked at assessment of companies. At assessment of companies, that also with respect to set off and carry forward of loss. Okay, there's a question there, sir. For that question, this point will get linked. Okay, set off and carry forward of loss related point, that also. Then individual, sir. For individual, 80 CCD subsection 2, 80 CCH subsection 2, 80 JJAA. These three are available even is under default raising. For companies, sir, even if I tell now, you will not understand. I'll again link this with assessment of companies chapter, then you'll understand much more better. Okay. So there's one question, sir, in deductions chapter we didn't solve. Five solved, six solved, eighth question solved. So we have only seventh question pending, sir. See, A has commenced the business of manufacturing of computers. He is a manufacturer. Employed 350 new employees, the details of whom are as follows. Okay, total additional employees how many, sir? 350. Number of employees joined on 1st April, 75. Their total monthly emoluments are 24,000. That means within 25,000 only eligible. 125 employees on 1st May, regular only. Total emoluments are how much, sir? 26,000. Eligible or ineligible? Ineligible. Okay. Then 50 employees, sir. Date of employment when? 1st August. August now how many months are there, sir? April, May, June, July. 4 months they didn't work. 8 months worked. 8 months na? Okay. More than 240 days only, sir. Okay. More than 240 days only. So these are also eligible. But last 100 employees, sir, they worked for less than 240 days. So they are not into footwear, apparel or leather industry also. They are into manufacture of computers. So for them 150 days is not applicable. Which is applicable? 240 days only. So these also not applicable. Then regular employees only participate in PF while the casual employees do not. Sir, this 50 employees which joined on 1st August are casual employees. That means they will not participate in PF. If they don't participate in PF, they are eligible or ineligible? Ineligible. Okay. Compute the deduction available. What is the deduction available, sir, for this 75 employees? 75 into 12 into 24,000. 2 crore. 16 lakhs is the additional employee cost. Can we claim total additional employee cost as deduction? No. Into 30%. How much? 64.8 lakhs. Okay, 64 lakh 80,000. Okay, done. So with this we completed the reductions chapter also. You can take a break. After break we'll start with written off income chapter.
So we are starting with our next chapter, written off income. Shruti, you're talking about previous question. Post your question. I didn't understand your comment properly. Post your doubt in the WhatsApp group. So written off income chapter, sir. Again, written off income chapter also will not have a 7 marks question. There is a chance of asking it for MCQ only. Okay, but it acts as a base for many other chapters, because many times we'll be referring like due date for written off income. Okay, so that's why first we should learn this irrespective of the weightage. Written off income. Section 139 subsection 1. It's about filing of written off income. Who has to file written off income? Okay, that one. Mandatorily. Who has to file mandatorily? If it is a company, if it is a firm, including LLP, they should file written off income mandatorily, irrespective of what is their total income, whether they are having profit, whether they are having loss, that all irrelevant. If it is a company, if it is a firm or LLP, it has to file written off income mandatorily. First one. Then, what about others? Others, na? Individual, HUF, AOP, BOI, local authority, artificial judicial person. When those people has to file written off income, when their gross total income exceeds basic exemption limit. What is basic exemption limit, sir? It depends on the regime you took. Default regime na 4 lakhs. Old regime means 2.5 lakhs. If you are senior citizen means 3 lakhs. Super senior citizen means 5 lakhs. So depending on the type of individual, his applicabilities, we should check whether gross total income, not net total incomes are here. What is the difference between gross and net? Gross na after subtracting chapter 6A deductions and 10AA exemption. Okay, so where net means after subtracting chapter 6A and 10AA. Gross means what? Just the aggregation of incomes under different heads, apply clubbing provisions and apply set off and carry forward of losses, you will get gross total income. Such gross total income, if it exceeds basic exemption limit or not, we should check. Then this gross total income also, sir, this is much more important. Sir, these are exemptions under capital gains. 54, 54B, 54D, 54F, 54EC, 54H, 54G. All these are exemptions under capital gains. Let's say, sir, I have long-term capital gain of 75 lakhs. But I invested within 6 months in RECL bonds or NHA bonds, then I am eligible for exemption under 54EC. Let's say 40 lakhs I have invested. So 54EC exemption I will get of how much? 40 lakhs. So what is my net taxable capital gains? 35 lakhs. So what happens, sir? I will take to the total income only 35 lakhs. But here what they are saying, like before giving this exemption, that means capital gains will be there in the statement actually 35 lakhs. But you should rework. I mean, you should add back the 40 lakhs. Okay, then you will again get the gross total income. Such gross total income you should take. So simple thing. If capital gain is there, check whether that capital gain is after exemption or before exemption. If it is after exemption, you should make it again what? Before exemption. Nothing but that exemption amount you should add back. Such gross total income you should check whether it exceeds basic exemption limit or not. If it exceeds basic exemption limit, then return has to be filed. Otherwise, as of now, not required. ఇవి మరి మీకేం ప్రాబ్లం ఉందండి వేస్తే చలేస్తుందా మీకు అంటే బ్రేక్ అని ఆఫ్ చేశారేమమ్మా మీరు ఏసీ క్లాస్ స్టార్ట్ అవ్వడం అంటే వేసేయండి ఓకేనా ఒకవేళ మర్చిపోయి ఏసీ చెప్పినా సో క్లాస్ చెప్పడానికి నేను అంటే నేను ఎగ్జాస్ట్ అయ్యేదానికంటే మీరు ఏసీ లేకపోతే డబుల్ ఎగ్జాస్ట్ అవుతాం సో రెండు రీజన్లు ఒకటి ఆక్సిజన్ తగ్గిపోద్ది రూమ్లో సో నేను ఇంకా ఎక్కువ స్ట్రెయిన్ అయిపోతూ ఉంటాను సో కాబట్టి ఏసీ మ్యాక్సిమం హాల్లోనే ఉంచండి ఆక్సిజన్ ఎంత తగ్గిపోద్ది అంటే ఫ్రీగా వెంటిలేషన్ జరగదు కాబట్టి ఆ పెద్ద గ్లాస్ అయితే ఇంకా తొందరగా ఎగ్జాస్ట్ అయిపోయింది So then, sir, first two cases, most of the people will get covered. First one is what? Company, firm, LLP. No choice at all. Okay? Being a company itself, they have to file return of income. Then others, when their gross total income, before giving what? 54 series exemptions, exceeds basic exemption limit, then they have to file return of income. Second one also done. Now, sir, third one and the rest all the categories will go only if they are not covered under the first and second point. Okay. Now, third point. He is a ROR. ROR means resident and ordinary resident. But, sir, resident and ordinary resident. He is a resident and ordinary resident, mostly individual only. Here we are referring to individual only. He is an ROR. He doesn't fit into the second case. But still he has to file return of income when? If he is a beneficial owner of any asset. What is called a beneficial owner? Beneficial owner, for the purchase of that asset, you only given money. But officially you are not there. You are not the owner. Nothing but binami. Okay? The property is under a binami name. But you are the true owner. Then you are called as what? Beneficial owner of any asset, including financial interest. If they are located outside India, so you are beneficial owner of what? Beneficial owner of a property which is located outside India and you have a signing authority outside India. I mean, you have a bank account, you have a signing authority outside India. Then, irrespective of your total income, you should file return of income. Understand, sir? Sir, if your total income exceeds basic exemption limit, by second point itself, you are applicable for filing return of income. But let's say your total income you claim like less than basic exemption limit. But still, if you are beneficial owner of any property which is located outside India and you have some signing authority outside India, then also you should file return of income. First thing. Second one. Sir, you are not beneficial owner. Okay, but you are a beneficiary of an asset which is located outside India. Sir, what is beneficiary? Property not purchased by you, not acquired by you. Someone purchased the property. For that property, maybe they kept under the trust. Okay, let's say, sir, the property was purchased and the property was given to the trust. So, trust will take care of the property. But for that property, who is the beneficiary? This individual is the beneficiary. I mean, whatever the income earned from that property, that has to be applied for the benefit of whom? This beneficiary. Then such beneficiary is also applicable, is also how to file return of income. Understand, sir? If you are a beneficial owner of any property located outside India plus signing authority, or if you are a beneficiary of any asset located outside India and you are resident and ordinary resident, then you have to file return of income, even though your total income is within basic exemption limit. Right, is a beneficiary of any asset located outside India. Then, fourth case, sir. Sir, first three cases not applicable. Then these things. If you have entered into these special transactions, then also you are applicable to file return of income. aggregate of deposits made rupees 1 crore greater than rupees 1 crore in current account of bank or cooperative bank. Okay, your total aggregate deposits in current account is more than how much? 1 crore. Okay, sir, you have 1 crore deposits, and if you are saying like your total income is less than basic exemption limit, now department does not want to trust you. So that's why they are asking what? First file written off income, then we'll check. Okay, whether applicable or not. Then this is current account now. What is the limit, sir? 1 crore. If it is savings bank account now, 50 lakhs is the limit. In savings account, if the deposits are more than 50 lakhs, in current account, the deposits are more than 1 crore. In both the cases, irrespective of your total income, you are required to file written off income. Then, your foreign travel expenditure is greater than 2 lakhs. You are saying like you don't have income exceeding basic exemption limit also, but you are going to Maldives, going to Bangkok, all foreign travel you are doing, and your expenditure is that expenditure is also more than 2 lakhs. Then again you should file written off income. Then third one, your electricity expenditure in a year is more than 1 lakh. Sir, if your total income itself is within 2.5 lakhs or 4 lakhs now, how can you pay every year 1 lakh electricity bill? So again they are having a doubt. You should file what? Written off income. Then if you are into business and your turnover or sales exceeds 60 lakhs, if you are into profession, your turnover or sales exceeds 10 lakhs, okay, then the aggregate amount of TDS or TCS deducted for you in a previous year exceeds 25,000. In all these cases, you need to file written off income. Once again, I am repeating, sir. Current account now, how much deposit? More than 1 crore. Savings account? More than 50 lakhs. Then electricity expenditure more than 1 lakh. Foreign travel expenditure more than 2 lakhs. Then turnover. Business now more than 60 lakhs. Profession means more than 10 lakhs. And in the current year, I mean in that particular previous year, the total of TDS deducted or TCS collected is more than 25,000 for you. Then also you should file written off income, even though your total income is within basic exemption limit. Sir, is it clear till now? Who has to file written off incomes? Okay. Then other entities. Other entities means like trust, political parties, research associations, universities, colleges and all. Sir, these are covered by these specific sections like 139, 4A, 4B, 4C, 4D, 4F. Okay. You need not to remember section numbers also. 139, if you remember, it is enough. Okay. Trust. Gross total income for a trust, sir. Trust na charitable trust kind of. Their gross total income before giving section 11 and 12 exemptions exceeds basic exemption limit. Okay, their total income before giving section 11 and 12 exemptions exceeds basic exemption limit. Then also they have to file written off income. Political party, their gross total income exceeds basic exemption limit before giving the exemption under section 13A. Okay, for political party, the exemption is under 13A. For trust, the exemption is under section 11 and 12. Before giving these exemptions, for trust and political parties, their gross total income exceeds basic exemption limit, then return has to be filed. Then, research association, news agencies or institutions. Okay, research associations, news agencies, mutual funds, many other things also covered, sir. But the total income before exemption under section 10, they'll have some exemptions, but before giving that exemption for research associations, news agencies and all exceeds basic exemption limit, then they also have to file written off income. Then universities, colleges, associations, business trusts, investment funds, for these, sir, irrespective of their total income, they should file written off income mandatorily. So mandatory people are not only just companies and firms, even universities, colleges, associations, business trusts, investment funds also has to file written off incomes mandatorily irrespective of their total income. Understand? Okay. Once again I am repeating, sir, these things. Trust, before giving section 11 and 12 exemptions if it exceeds basic exemption limit. Political parties, before giving 13A exemption exceeds basic exemption limit. Research associations, news agencies, institutions, before giving section 10 exemption exceeds basic exemption limit. University, college, associations, business trusts or investment funds, they have to file mandatorily. So once again, sir, the total we'll discuss. First, for whom it is mandatory? Company, firms, towards the end also we discuss something extra. Investment funds, universities, colleges, associations, business trusts. Okay, done. Then, when exceeds basic exemption limit, all the other persons, if their gross total income exceeds basic exemption limit before giving 54 series exemptions. Trust political parties na before giving section 11 and 12 or section 13A exemptions. Research associations, news agencies na before giving section 10 exemption, if it exceeds basic exemption limit, then also they have to file return of income. Then resident and ordinary resident, if he is a beneficial owner of any asset located outside India plus he is having signing authority outside India, then also he has to file. If he is a beneficiary of any asset located outside India, then also he has to file return of income. Then if he enter into specified financial transactions, then also he has to file return of income. What are those? Current account deposits more than 1 crore in a year. Savings bank account deposits aggregately more than 50 lakhs in a year. Done. Then electricity expenditure more than 1 lakh in a year. Foreign travel expenditure more than 2 lakhs. Turnover. Business na 60 lakhs. Profession means 10 lakhs. Then the aggregate of TDS deducted or TCS collected in a year is more than 25,000. These are the cases when a person is required to file return of income. Then due date for filing return of income. Shahrukh Khan, yes, you can watch CFNL student also, but don't rely completely on this, because I'll be covering only to the extent needed for CMA students as of now. And then one more thing, okay, we'll not be uploading the whole series of income tax. These are like demo classes. We'll upload only one more class in the YouTube. Then due date for filing return of income. Due date for filing return of income for companies and to assessees to whom tax audit is applicable. And then third one, sir, important. If to firm tax audit is applicable, then for the partner also same due date, like the firm only. Okay, so 3 persons are applicable here. First one, companies. Second one, assessees to whom tax audit under 44AB is applicable. Third one, partner of a firm. For him audit is not applicable, but for the firm audit is applicable. Sir, understand? For firm audit applicable, only from when firm books are finalized, partner will get his share of income or share of profit, then partner return can be filed. That's why to firm, if tax audit is applicable, then even to the partner, for the partner individual capacity, no audit, but still the due date remains same, 31st October of assessment year. If transfer pricing provisions are applicable under section 92E, they have to provide a transfer pricing report also. Okay, TP report. Okay, they have to get an audit if transfer pricing provisions are applicable, and they need to provide TP report, transfer pricing report. Then in such case, their due date is 30th November of assessment year. In simple, transfer pricing provisions applicable or not. If applicable, 30th November of assessment year. Otherwise, audit applicable, normal audit applicable, tax audit, or they are companies, or is a partner of a firm to which audit is applicable, 31st October of assessment year. Rest all covered under other cases. For them the due date is 31st July. So now for individual, what is the due date? Now we cannot tell. The information is not enough. Individual, whether for him tax audit applicable or not. If applicable, 31st October. Otherwise, 31st July. For company, what is the due date? We cannot say straight away. For company, transfer pricing applicable or not? If transfer pricing provisions are applicable, 30th November, otherwise 31st October. To firm audit applicable or not is the first question. To firm audit is applicable, then for firm also 31st October, the partner of that firm also 31st October. To firm audit is not applicable, then to the firm also 31st July, to the partner of the firm also 31st July. Okay, it depends on whether audit applicable to the partnership firm or not. What happens if return not filed by due date? There will be 234A interest for delay in filing the return. Then 234F fees for delay in filing the return. What is the fees, sir? If the total income is up to 5 lakhs, then the fees is 1000. If the total income is above 5 lakhs, then the fees is 5000. So 234F. What is the fees, sir? Total income up to 5 lakhs, na fees is 1000. Above 5 lakhs, na the fees is 5,000. So 234 na again we'll discuss in advanced tax. 234F I will not discuss once again. So remember it clearly. For delay or for late filing in return, what is the late fee? 234F. 234F. Total income within 5 lakhs na 1000. Total income above 5 lakhs means 5,000. Understand? Sir, every day you should revise, sir. Otherwise, maximum you can retain yesterday's class. Okay, if I go back to 3 days back, 4 days back, na, then everything gone only. So how many times you listen to fast track, it will be of no use unless you revise. Okay, group, if you are alone, if you are doing single group na, then you you are listening to the class for almost 2.5 hours, then again at least 1.5 hour if you should if you allocate only, then you can revise. Okay, still, sir, even with that 1.5 hour revision also, you'll forget some points. Okay, if you don't even revise that 1.5 hour, na, then by the time we go to 20th day or 21st day, then all the first, second classes, these basics, if I ask, then you will not even remember, you cannot even recall. Okay, then this is only March. By the time we go to May, then you will be in a position like, did I took coaching also? If return of income is not filed, if return is not filed, then what they will do? They'll compute income or they'll assess your income with the information available with them. That itself is called as what? Best judgment assessment. If you write exam, then they can evaluate. Okay, if you filed a return, then they can check whether you did correctly or not. You not even filed return, then they do what? Whatever is the information available with them, with that they'll calculate. Okay, that itself is called as what? Best judgment assessment. And for non-filing of return, there can be even penalty under 271F. Sir, how do I furnish return? Can I send in WhatsApp? Okay, WhatsApp, Telegram, or else like can I write a letter? So what is the mode of filing return? The mode of filing returns are paper format, sir, which is mostly discontinued now. There is no paper format except only one case is there where you can file paper form. In rest all the cases there is no such option. Then electronic return with digital signature. Sir, digital signature also we should attach for verification. Mostly in audit cases and company cases it is needed. Digital signature also has to be, DSC has to be attached. Normal individuals or firms for whom tax audit is not applicable, then you file return electronically but verify the return through ITRV. What? You will file a return, then the manual ITRV will take printout. Then on that you will sign and send it to the CPC. Okay, manually you will send it to the CPC. And the last one, file return electronically, there itself you will verify also. What? OTP will be sent to your Aadhaar linked mobile number. That OTP you can enter, or else through net banking. Okay, in your bank portal there will be one EVC code will be generated that you can enter. Okay, like that you can verify your return. One is paper format, directly filling everything and submitting in the income tax office. Mostly outdated, nowhere we saw that. Then electronic return with digital signature. Mostly who will do, sir? Not mostly. It is applicable for companies and to persons to whom tax audit is applicable. Then third case, file return online only. In the website portal only you will file return. After filing, two ways. How do you verify that? One thing, you download the ITRV acknowledgement, sign it manually or physically and send it to the CPC center, Central Processing Centers. Okay, mostly in South India, we'll send it to Bangalore. Okay, then filing return electronically. Normally only, you file return online only, and there itself you'll get it verified. By entering that OTP or EVC code, you'll get it verified. These are the format of filing returns. Okay, so for whom DSC is needed? For companies, political parties, firm, LLP, individual and HUF. Sir, companies and political parties, na, irrespective of audit, they have to attach digital signature. But whereas for firm, LLP, individual, HUF, only when tax audit is applicable, they should file e-return along with digital signature. Then paper mode is available only for an individual whose age is greater than 80 and he is filing ITR 1 or ITR 4. ITR 1 na, he doesn't even have business income. ITR 4 na, he has business income but opted presumptive scheme. Then such person can file any mode. Any mode na, even paper form is also available, but even those people also we never saw filing paper form. Okay, then the last one, sir, any other person. Okay, any other person, he can file through any of these three modes except paper form. Then 26As. Sir, if you did articleship, then you will not have any doubt about 26As statement. But if you don't have any practical experience means, then obviously 26As means you may think like accounting standard also, intangible assets. Okay, it's not accounting standard 26, sir. It is 26As is a statement which is generated in the income tax portal. It will reflect, or by looking at the 26As statement, you can see what is the TDS deducted for you, how much is the TCS collected from you, how much is the advance tax you paid. All these things will be reflected in the 26As. Okay, so it reflects yearly basis the advance tax, self-assessment tax, and even the normal assessment tax paid, the total tax paid, TDS, TCS deducted, if any refund issued, and then even from GSTR 3B, the total of all the months turnover will also get reflected in GSTR 3B. In GSTR 3B, you'll be showing your sales, right? The total of all those months' sales will be reflecting in 26As, and details of any specified financial transactions like electricity expenditure or else foreign travel expenditure. Those kind of specified financial transactions will also be reported in 26As statement. Okay. I still remember, sir, when I joined office. So just 2 days, 3 days happened. They asked me to do an individual computation only. He has house property income and all. But I completely forgot by that time how to calculate house property and all also. Somehow I Googled, I did everything. Excel also I don't know because third day, fourth day, for me Excel almost like 15 to 20 times they send me back. Okay, do it this way, do it that way, because they were more particular about the formats also. The same border, same kind of uniformity, same text, same style, nothing has to be changed. Okay, 4 or 5 are like calculation mistakes. The other 10, 11 are like presentation mistakes. Yet finally, I thought it was confirmed. Then they asked like, did you check 26As? I don't even know what is 26As by that time. Okay, so then again I came back. I don't even know. I don't even process it properly. What is 26As? He's talking about accounting standard now. What it is, how it is connected to him. Okay, then I came in the office. Then someone I asked like, what he's saying. Something like 26 and all. What is that related 26? Then they explained this is a 26A statement. It will consist of all this. We need to check mandatorily if you have to file a
return of income. Okay, there shouldn't be mismatches between 26 years and the return we're going to file. Okay, so that's why what you should understand is, sir, articleship is mandatory. Okay, so some people already started saying like, so we are doing CMA, but there are not that much opportunities. Opportunities are there, you are not meeting the skill standards of industry. Why you are not meeting skill standards? Because you're simply focusing on clearing CMA foundation, CMA inter, then again CMA final. Sir, understand, after some point of time, certificates alone will not give you the jobs. They obviously need whether you can do that work or not. Certificates are enough only for government companies, but for private companies, certificates can take you only to a level, to an extent. Okay, certificate can allow you to sit in the interview, but skills only can let you crack the job. Okay, so skill set are very important. You should, sir, I didn't did articleship, sir, but I already came to final, so what to do? Then you should be like a storyteller like Rajamouli. Gather the experience from your friends, narrate make a powerful story with all the twists, plots also, because they'll cross question you. If you say something, then based on that only they'll ask 5-6 series of questions in interview. So you should be super like, just like as Adi Seshu will write his story, right? Gudachari and all, with more plot twists. If this happens, what happens? That happens, what happens? So like that, you narrate, you prepare a story and make yourself comfortable that you are telling it as if your real experience with everything, okay, possibilities. That's what you can do. Okay, but that is not at all advisable, sir. Okay, if you are not did na, at least after writing exams, go and join 3 months, 4 months also, at least gather that experience. That is that also, sir, to narrate this story, at least that 3-4 months experience will help you. Okay, in 3-4 months, you, okay, 12 months is minimum, sir, because you will complete the whole cycle once, so you'll understand what is happening. Okay, 2 years, 3 years, 1.5 year is mostly enough. Like CA articles, 3 years now, you will not do much. But in CA articles, what you will do now, first year you will be as a junior article. Okay, you will learn how to do. But by the second year, you will learn how to manage the team also. Mostly, what they will do, sir, you will become senior, there will be another junior articles, so you will be training them. So you will be knowing how to train them, how to manage them also. It's not about just learning the skill, it's even about managing a team also. So articleship is very much important. So if any of your friend or junior ask you about, should I do? Okay, they'll see how they'll come now, they'll come with emotionally. Sir, I already wrote inter 6 attempts or 4 attempts, 5 attempts. I already wasted 2 years, 3 years. Now again articleship now 1 more year. Okay, my family is already having so many problems, I need to clear. Yes, all these are there, but understand, you cleared CMA final, but not securing a job. Okay, no pain can replace that. Okay, so by the time you clear CMA final, you should have that internal confidence that I can do anything. Okay, maybe not this job, I can go for some other job, I have the required skill. That confidence you should get. When you will get, first you have that articleship experience and all, then, sir, this qualification is not just about you securing a job. The qualification should give you the confidence that I can live anyway. If not job, I can start practice. If not practice, I can go for teaching, or otherwise I can do some any other thing. Now that's what the confidence should, the qualification should give you. Okay, so not like a, otherwise, sir, if the same thing happens, if the malpractice is happening, okay, within 3-4 years now, we'll make it as like a normal regular 10th in MBA degree or normal graduation degree only. Okay, first, don't encourage the malpractices also. Even if your friends doing also, so I don't say like you only have to go and tell the invigilator, but you don't involve. You don't involve, you write on your own. Okay, yes, you'll make quote me examples, sir, that fellow cleared with copying only, but still he got MNC job, he settled so much. Sir, that is one example only. There might be other 90 people who couldn't. Okay, there are almost 600-700 people debarred in the last attempt. Okay, they are not even eligible to write the next 2 attempts. Almost there. CMA journeys came to a halt. So nobody talks about this. People who are debarred, sir. So that's why don't go into that one.
We ourselves reducing our standards. Sir, how it happens now? If you go, I have seen practically. See, in COVID time, like 21, 22, that time home-based online exams has been happened. So that time so many people cleared CMA final also. Okay. Now, okay, I know few people who have cleared that time, and because of reservations and all, they got even in good PSU jobs also. But we know, I mean, see, some of my friends referred them also. See, in PSU and all, okay, he's our known student only, or known person only. If you could do anything, help him. So at the time of interviews and all, they have at least given some consideration and all. But later on, they started scolding us. Okay, what? You sent this kind of people, they doesn't know anything. We thought CAs and CMAs, sir, why? Because in most of the places, CMAs are equivalent to CA roles. If you cannot do the same kind of job, obviously they'll see separately, okay, they'll come into a notion that CMAs doesn't have standards only. So understand, articleship is must. Whoever is your junior and all. Sir, I have seen many institutions, once you cleared CMA internal, they'll start calling you. It is irrelevant only, you can join final classes, no issues and all. Sir, it is not at all correct only. You have to do articleship at least 9 months, 10 months. Okay? Must. Sir, otherwise you cannot do anything confidently. See, for going interview also, you will be so much afraid because you don't know what you'll ask and all. Sir, subject now you prepared already, but you don't have the answers for the practical questions you'll ask. See, if you already did articleship now, you can say confidently, I did this, I didn't know that one. Confidently you can say. Otherwise you may think like, oh, this one also they'll do now. You'll tell some kind of answers and you'll easily get caught. Okay, interviewers now, they are not someone who cannot test you. So based on your expressions only, they can tell you whether you are having genuine experience or not. Okay. What study mat will be provided in fast track classes? Sir, for DT, 3 sets of books will be given. There is a concept book, there is a workbook. Concept book is named as Pulse, workbook is named as Applicator, and we have a class notes also, which is handwritten. Okay, the one file which I am discussing now. All these 3 printed books in color format will be given to you. But as of now, Pulse and Applicator are only being sent. Handwritten will take another 1 week or 5 days time from our side only. Then for the transportation and logistics another 5 days. So it takes at least minimum 10 days to for you to get the handwritten notes. Then section 139 1C. Section 139, subsection 1C, exemption from filing written off income. Exemption from filing written off income. Sir, certain people are not required to file written off income also. Who? Central government can specify such class of persons. It has specified individual, resident, age greater than 75 years. Okay? Almost not super senior citizen, but age greater than 75 years. They are having only pension income and or interest income or both. 75 years now already they are retired. They are having only pension income and interest income, or only pension income or only interest income. Those people are exempted from filing returns. Okay, and they should be what? Resident also. Both incomes, sir, look at the other conditions. Both these pension income and interest income are credited in the same bank account. Same bank account, that also a scheduled bank, not any bank. Okay, then such person files a declaration also that I am not going to file return of income. Then what happens? Bank only deducts the TDS
how much ever he has to pay as tax, that tax will be calculated by bank, and bank only will deduct TDS for him under section 194P. So government got whatever is the tax needed in the form of TDS, so that person is exempted from filing return of income. So when he is exempted, sir, individual, resident, age greater than or equal to 75, having pension income or pension and interest income, any both are there or any one of them is there, and both should be created into the same bank account in a specified bank, and such person files a declaration, then bank should deduct TDS under section 194P. If bank deducted TDS under 194P, then only this person exempted from filing return of income. Then section 139 subsection 3, it is about loss return. Loss return. Sir, what we said, a person has to file the return only when his total income exceeds basic exemption limit. If I am having loss, then obviously my total income will not exceed basic exemption limit. Sir, this point will not applicable to company and firm. Because companies, firm and LLPs, mandatorily they have to file return of income irrespective of income or loss. But individuals, HUFs, AOPs, they have to file return of income even though they are having losses. Why, sir? If they are, only when they file a loss return, they are eligible for carry forward of such losses. Sir, mostly the losses can be carried forwarded for 8 assessment years. House property loss, business loss, capital gain loss, capital loss, this can be. IFOS loss, no carry forward option at all, sir. IFOS loss, first IFOS loss itself is rare. Even though such loss is there, it can't be carried forwarded. Only we can do set off. Okay. Then PGBP also 4 type of losses. There are 4 types of losses, sir. One thing, normal business loss, specified business loss, speculative business loss, and the next IFO is also this one, income from owning and maintaining horses for race. Normal business loss can be carried forward for 8 years. Speculation business, specified business loss can be carried forward for indefinite period. Speculative loss can be carried forward only for 4 assessment years. Even income from owning and maintaining horses for race also can be carried forward for 4 assessment years only. But to carry forward that, you need to file loss return. Okay. So by filing the loss return only, you can carry forward business loss, specified business loss, speculative business loss, capital loss, and loss from activity of owning and maintaining racehorses. Even without filing return also, you can carry forward house property loss and unabsorbed depreciation. House property loss and unabsorbed depreciation can be carried forwarded irrespective of whether the return filed or not. But whereas these 5, business loss, normal business loss, specified business loss, speculative business loss, capital loss, or loss from activity of owning and maintaining horse races, this can be carried forwarded only when the return is filed on or before the due date. Restriction is only for carry forward. Sir, you filed return belatedly. Okay, sir, by due date return has to be filed, but you filed return belatedly. No problem, sir. Since you filed return belatedly, you can do set off. But what you can do, you cannot do carry forward. You can do set off. Set off is different. Carry forward is different. Set off means what? In the current year, loss under one head, if it can be adjusted with other head incomes, it is called set off. So set off can be made. What can't be made? Carry forward can't be made. Okay. But condonation of delay. Condonation of delay, sir. Because of some genuine reason, you cannot file the return. Let's say, for example, on the due date, let's say 31st October, you are trying to file the return. But there was some technical issue, some server issue. You cannot file the return by midnight also. You able to file only on the 1st November, early morning 4 a.m. But already by that time due date lapsed, right? But yours is a genuine concern, genuine reason. Because what? Because of technical glitch or technical error or mistake issue only, you can't file the return by 11:59 p.m. But you can file by what? 4 a.m. Okay, by that time the issue solved, you can file by 4 a.m. But still, it was filed after due date. Can you carry forward or not? Yes, sir. That time what you can do? You can apply to PCIT, CIT or CCIT or PCCIT. They can condone the
delay, so that you can carry forward your losses. So to whom you should ask for condonation? If the loss is up to 1 crore, you should ask the condonation from PCID. PCID na Principal Commissioner of Income Tax, CID na Commissioner of Income Tax. If the loss is between 1 to 3 crores, then the condonation has to be made by Chief Commissioner of Income Tax. If the loss is above 3 crores, then the condonation has to be made by Principal Chief Commissioner of Income Tax. P means principal, C means chief. Okay, Principal Commissioner of CID means Commissioner of Income Tax. Principal Commissioner of Income Tax, Commissioner of Income Tax. Here, Chief Commissioner of Income Tax. Here, Principal Chief Commissioner of Income Tax. Then, sir, okay, I'll close it for now, sir. Tomorrow, we'll be completing even the returns chapter also, along with questions.